Good afternoon, everyone, and welcome to Stock Market Today. It's Ali, Coram, and Carson here with a breakdown of the action in today's session, where we saw stocks rally sharply in the final few minutes of trade. So rallying today, but still at a lot of volatility remains. And you are on mute.
That's what I get for going on mute. It was a wild day, but ultimately we closed higher. Investors should be taking this a little bit easy in this current environment, but we should take a look at Meta Platforms, Fortinet, and Boeing, which did show some positive action during the session.
All right, we will take a closer look at those three stocks, but first let's analyze the major indexes and provide a little bit of color about what you said, Ed, in terms of taking it easy. You'll give us the scoop here because the NASDAQ finished today up 2.1%, so a strong gain after an upside reversal in yesterday's session. We also had the S&P 500 up 1.7%. The Russell with a gain of about 1.6% headed into the final few minutes of trade. The Dow did lag, but still up about 1.1% today. So we are seeing a lot of volatility in the market right now, but we are seeing an attempted reversal of the trend. So now with the NASDAQ seeing a 2-day win streak, closing near session highs today, trying to get back above some key moving averages there. But we're on day 2 here of an attempted rally.
Day 2 of an attempted rally on the NASDAQ, the S&P and Dow probably day 1. This was a nice move. We closed up, as you say, 2.1%, and so it was a really strong finish. It was a strong open, solid gain during the morning, then faded quite a bit, especially on the Dow and S&P and bank stocks. Came on in the last 40 minutes or so. So pretty good, strong action here. Got back above the 50-day and 200-day line. So the NASDAQ, which obviously has a lot less bank exposure than the other indexes, definitely had a decent day here after the upside reversal, but it's very volatile. I mean, there were some big swings intraday. It's hard to know. We're still not comfortable. We'll look at other things. It's still not clear if we're out of the woods yet on banks. And even if we are, then that creates a whole bunch of things. Well, if bank stocks are no longer an issue, then bond yields will rise and Fed rate hike expectations will come back up, which, mind you, we'd much rather have Fed rate hikes than a bank collapse. So I'm not, but it's just that there's just so many things in flux. It's not clear, it's hard to know where the edge is. Yes, if stocks keep on rallying, if you own stocks, you'll be happy, but it's hard to gain footing in this environment where things can really swing like full percentage points in just a matter of minutes.
Yeah, that does make the current environment pretty tricky when we seem to be at a delicate place where, if you're just looking at the technicals alone, if we see another day of strength, arguably we'd be getting aggressive entries. Ed, maybe this is just a big shakeout, right? If we're just looking at the technicals alone, but you have to put everything else into perspective as well, because maybe, early on in a rally attempt, there are certain situations where one might feel more comfortable getting more aggressive early on versus right now. It seems like you could make a move, but you should probably be a little bit cautious about doing so.
Yeah, I'm really cautious about things. I mean, it's a little bit like a situation where you almost get into a car accident, or that moment where you think you might get into an accident. It's like, oh my goodness, everything could go. I could die, and then you don't. And it's like, oh, so everything's perfectly fine. And so maybe that's what the market will do. Okay, oh, everything's back to normal. Let's go. But you don't know. I mean, it's just a wild time where it can just, the flip from good to bad is just so extreme. It's not, oh, the Fed may raise rates by another quarter point. This is just the extreme between a positive outcome and bad outcome are just much more magnified right now.
So if traders did want to place directional bets based on tomorrow's action, I guess then it comes down to scenario analysis of what we could see on the positive side, which is something that I've outlined: clearing an aggressive trend line, getting back above the 21-day line. So it seems like that's the upside scenario. But what if we turn tail again, Ed. That is another scenario that could unfold, and at the very least underscores the heightened volatility that seems like it could remain for a while.
Yeah, and if we did reverse lower, especially if it's a bank-led sell-off, if there's real concerns that the banks are really going to be in a lot more trouble on a much more broader scale, that could have a devastating effect on the economy. And so there's all sorts of things, like from the 2007, 2009 crisis. You just have to be thinking about it. If you do take trades, be thinking about them as short-term, thinking about taking very short-term profits, because it could all zip around very quickly.
Mm-hmm. Yeah, and setting a stop that makes sense, like maybe if we do get a strong day tomorrow at the low of today's trade, perhaps might make sense. But of course, you have to factor in what's your position size, what percentage of your portfolio is at risk. Look at the dollar risk there. Also, look at the percentage risk for the trade and different levels that make sense there. All right, let's quickly take a look at the other major indexes. Here is the S&P, which looks like it's coming right back up to that 200-day line. And we know in the past that has been a pretty difficult hurdle for the S&P to clear. So that's something to keep in mind here.
Yeah, the S&P and the Dow basically hit resistance at the 200-day line today. Dow a little bit further off, but possibly here. And so we'll just have to see if they can get that. And then there's other hurdles. They have the 50-day line. They have the 21, a lot of things to get through.
Yes. And small caps have been getting demolished lately, an oversold bounce here today. So trying to recover, but a lot of ground to make up here on the small cap front as well. Let's check in on the 10-year yield, getting a bounce after getting hit very hard in the last couple of days, still down for the week, but finding support at the 40-week line here. Your thoughts on the wild action that we're seeing here?
Yeah, it's funny because SVB Financial got in trouble in part because it bought too many long-term treasuries and it wasn't matched well with its deposits. But yeah, it's just there's this massive safe haven flow. But then if the banks, if you think that the banks are going to be okay, then there'll be a massive flow out. If betting on bonds and treasuries right now is basically a bet one way or the other on, are we going to be in a major crisis or is it all going to be okay? And big swings, and you can expect that with stocks and bonds probably for the next several days.
Mm-hmm. And we also want to take a look at XLF and KRE because they too bounced today, but only making up a little bit of the ground and still closing well off highs. XLF up less than 2.1%, still down for the week. And this comes after a decline of 8.5% last week. KRE hit even harder, of course, last week, down 16%, still down 10% for the week with a couple of days of trade left. I think this is a pretty disappointing fade into the close here for regional banks, Ed.
Yeah, there were some great moves early on in the regional banks, and and unlike the major indexes, which peaked in late morning and then bounced late in the day, this one peaked basically right at the open and really didn't bounce. If you could call up WAL, WAL, this was one of the most disappointing. There was this one was up, I think 50% at one point, and it actually was down double digits late in the day before it did bounce again. This has swung between 40 and 7.5 basically in the last two sessions. I mean, that's just crazy. That's a bank stock. I mean, so that's the kind of volatility KRE is what you're seeing in there.
Yeah, pretty stunning to look at there. Okay, let's also take a look at chip stocks because this area is quite the bright spot right now amid the turmoil. We have the SMH ETF up 3% today and some solid volume. It looks like it's approaching a potential trend line entry, but arguably already actionable with a bounce off of the 50-day line accompanied by some volume.
Yeah, this one, I can see why people would do something like this because it hasn't been hit that hard by the crisis, and you could imagine that if things got better, this would be leading again. So there might be a pretty decent risk reward. Still a lot of risk, but yeah, chips definitely look really strong. There's some big high flyers, but there's a lot of other names that are sort of in, middle of the road that are looking like SMH here, looking solid here.
Mm-hmm. Now let's take a look at some individual names. We've got Meta. Who knew, Ed, that we would be focusing on a buy point for the Facebook parent, which was just looking so terrible in 2022, but now some life coming into the social media giant with a strong rally off of its lows. Accentuated by a big gap up on earnings. It was able to hold up a lot of that move, finding support at those shorter term moving averages, and a solid move today, up over 7%. Heavy volume. We've seen some nice blue volume spikes as of late. So this stock arguably actionable today as well.
Yeah, you have that trend line, that you sort of pointed there. We could do it from there. You could do it from the top of the base. You could do it from just do a sideways. So however you do it, it was above that. I mean, it was all pretty close. So this bounce, they announced new layoffs, which honestly had been people knew were coming. It seemed like, but still that was news. They had done another layoffs, in November. And just the fact that Zuckerberg is switching towards boosting profits as opposed to spending like crazy, like he was doing for much of last year, really shifting things around. This was the best close since June. So all of a sudden, this is now a big cap leader when it was the clear laggard last year. So yeah, it definitely was actionable today. It's how far is it above the 10-week line? It seems like maybe like 9%.
Let's see. Now
15.
it's
Yeah.
almost 15%.
Yeah, I think earlier in the day when it was first crossing that trend line was probably the best time to do it, but it's within that base. It's still actionable. It's just
9% above the 21 day. So if you wanted to use that low as an area to get out, that could
in which
make
case you want to size your position, because that is getting to be a pretty sizable decline at that point. But relative strength line, a lot of things are looking really positive on this, improving profit picture. So definitely one. This was added to Swing Trader today, I believe. And I can understand why.
Yeah, and it seems like investors are focused on this return to growth here that's projected in the next couple of years. Let's also discuss Boeing, ticker BA. Not a super strong finish here today, but still up 1.9% for the day. So hitting a little bit of resistance at these converging moving averages. So Ed, if we can see Boeing follow up tomorrow with another day of gains and get a good close, would this stock be worth taking a closer look at?
Yeah, I mean, there's a couple of things. They had it just barely undercut recent lows yesterday and bounced back. After this week, it should have, I believe it should have a flat base on a weekly chart. I know it doesn't seem that long, but it would actually be long enough on a weekly basis for that. You got that downtrend line. So I think if it got above today's high or above that short-term high from a couple weeks ago, either way you want to use it, it'd still be pretty close to the 50-day line. That would be a way to go. But you can see here it is. Everything was going well, and then the market faded. And this one didn't really bounce back. That's, again, you just don't know. It did have positive news. It's going to sell a bunch of more Dreamliners to a couple of Saudi airlines. They've racked up a lot of orders in the past several months. You can see how much the stock has rallied. So it's taken a pause here, but definitely one to be watching if this market can gain its footing.
Okay. And in the security software space, let's take a look at Fortinet. This is ticker FTNT. We've talked about group peer Palo Alto recently, flashing relative strength. Fortinet is as well. An upside reversal at the 21-day line yesterday. Today, adding on another 2.7%. Not seeing overwhelmingly strong volume by any means, but it did have that big uptick in volume, Ed, at the beginning of the year, especially on that big earnings gap.
Yeah, it'd be nice to see some positive volume. There hasn't been a lot of bad volume in the last several weeks either, but yeah, but it held support of the 21-day line, sort of undercut yesterday the lows of, got to about a 1 month low, and rebounded higher, back above the 21-day. If we can get above last week's high, it would probably be, you could see that as an early entry there. Not that it would be that much of an early entry. You can sort of treat this as sort of a handle to a consolidation that goes back to, say, June or April. There was resistance, I think, back in June, right or just above 63. So it, if it gets above that, it would be clearing a long-term area there. So that would be something, and it may also form just a flat base. It could just, it would need like another week and a half for that. So this is just showing its strength here. The RS line isn't at a new high, but it's getting up there. It just needs a little bit more, and it would get above those June levels. So this, again, this is where there's stocks to watch. Like, this is one to watch. So maybe this will fade away again. I mean, so that's the thing. You don't necessarily need to act now. It's day 1 or 2 of a rally attempt. You don't need to go, it hasn't really proved itself. Bad markets can have good days. So, but this is one, if it does, if the market continues to show strength and this powers higher, hopefully on higher volume, this would be one to consider.
Yeah. All right. Well, circling back to the market briefly before we go, Ed, when we're talking about rally attempts and thinking about when to wade back in, looking for a follow-through day is the next step. So we want to see a strong gain in volume heavier than the prior session. In very rare circumstances, this can happen on day 3 of a rally attempt, but typically on day 4 or later. So what should investors be thinking about in terms of where the market could head from here?
Honestly, it could go a lot of places, and it could go a lot of places pretty quickly. And I think that there's really, there's just scenarios, and you just have to remember that the scenarios are outsized right now. I think the trend line of the 21-day line that you're talking about is definitely something to watch, but you could go above that and fade off. I mean, don't get too excited by a strong open or even a strong day. I think the thing is to prepare, get those watch lists ready. If we do steady, and it could be that we really do get confident in the bank stocks again, not just for 5 minutes, but for a day, a week, then maybe things will, we can really move again. So that would be what you'd be watching for. But I think you wait for that more positive signs rather than try to preemptively guess that it will.
Sounds like a plan, Ed. Thank you so much. And thanks everyone for tuning in. We'll be back with more tomorrow morning on IABD Live. We hope you join us, investors.com/IABD Live for all the details there. And we'll also see you right back here tomorrow at the close.